Hello, this is the TradeSight U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday, the 10th of February, 2014, and ending on Friday, the 14th. Be aware that next weekend is a three-day weekend. Stock market is closed Monday, the 17th, for the U.S. President's Day holiday, which probably means that this Friday will be a little light as well. Let's start by looking, as we usually do, with the daily charts of some of the key indices and stocks. Then we'll look at the action from this last week, and then we'll look at the economic data and see what we should expect. So here it is. We came into the last weekend, if you go back and review the preview I gave, talking about how the S&P here, daily chart, had this nice move straight back to the static trend line, which is the last low of the 9-bar count right here. And we had gotten settled right on top of that. And I said if we cracked it, it would probably lead to a plunge. We did crack it Monday. Monday was a great trading day for us, one really solid trading day as it cracked, and we just went to town on the short side. Tuesday was a little light. Wednesday was decent. Thursday was nice as we bounced and rallied amazingly back above that level, and then Friday we gapped up and kept going. After all that, we ended up closing green for the week. That's pretty amazing. Let's take a look at the Nasdaq 100 while we're at it. Same deal. Didn't crack. Now, see, here's the deal. Did not crack and close below the static trend line. It had in place that red line. Matter of fact, it bounced right off it. So we'll be watching that one as well down the road now for that same type of a crack day if we ever get it. Here's a look at the semiconductor index. Dip and bounce as the others did. Here's a look at the biotech index. Okay. Again, dip and bounce, although the bounce there was all on Friday. Here's the crude oil inventories back to $100 a barrel, right at it for the close here on Friday. And finally, let's take a look at gold for the week. Not much there at all. So what did the stocks do? Some of our key stocks that we like to trade. Here's Apple. Actually climbed the whole week. Even on the breakdown day, Apple was up. Apple just seems to sometimes not care about the market, which is interesting since it's such a big piece of it. Google did more like what the market did, gapped down, pushed down Monday, sideways Tuesday, Wednesday, up Thursday, and Friday. Here's the Amazon, gap down on Monday, kept going. I'm sorry, gap down last Friday on the earnings, kept going on Monday, rebounded, closed near the high of the week. Here's a look at our Netflix we like to trade. Boom, nice breakout here on Friday. Here's a look at Tesla, making a nice cup recovery off of that. Remember when this thing gapped down on the earnings? Making a nice cup recovery here back to the highs. This is going to be a breakout for us at some point in time, obviously. Matter of fact, an intermediate breakout point might show up here on the list for Monday. That's about it. We'll take a quick look at Twitter, which got clocked. Now, I've pointed out on Twitter, this run up in the end of the year, basically everything from 50 to 75, in my opinion, was because Twitter was the perfect storm for the longs. It was a stock that had come public at $26, opened in the 40s, never really dipped under 40. Everybody's up at least 50% that owns it early. Once it starts to turn up, now everybody that owns it here is in the money as well, and nobody wants to sell that going into the end of the year. Nobody. So there's no reason to lock in a big tax gain like that. And that's why you get this big run up into the last 2 days of the year. I think somebody got out ahead of that, shorted it a bit, knowing it was completely overvalued at the time. And you can see it kind of rolled around in January, and then the earnings came out. And it gapped down, and guess what? Everybody realized it didn't make that much money, and now it's heading back. And I think that 50 level, again, is going to be the key, somewhere under there. That was the high of the day that it came public, so watching that area. A break under that, I think, is really going to... This thing can still make new lows as far as I'm concerned. All right, so what did we look at this week? Here's 10-minute bars on the ES. Again, you can see Monday sharply down. We had a real nice trading day. Everything triggered short for us. Tuesday was pretty flat. That's why it was so tough. Wednesday, at least a little more back and forth. The afternoon was light. Thursday, we got a gap and go. We gapped up and kept going. Had a nice day on the long side. Friday, another gap. So now we've left two gaps way behind here that we'll have to fill at 1744 on the ES at some point in time. Friday a little bit tougher because market didn't make up its mind early. Gapped up, tried to push higher, pulled back, didn't fill the gap, drifted higher, broke out over lunch out of that cup and handle, and then drifted straight into the close. So not really our type of trading session there, but we did have a very nice week. Here's a look at the Nasdaq side. Also gained, it looks very similar to the S&P, obviously, this particular week. I'll take a look real quick at Apple during the week. Okay. Like I said, up almost every day. And I did want to point out the crude oil action during the week here. Look at that 13th bar on the 10-minute chart is the high of the week. Unbelievable. All right, let's take a look now at economic data that's going to be coming out this week, see what we should focus on. So we start Monday the 10th. There is no data. Tuesday, we've got the JOLTS job openings and wholesale inventories. Wednesday, we've got MBA mortgage index and crude oil inventories, treasury budget. None of that's big. Thursday, initial and continuing jobless claims. That's a weekly number. Retail sales, business inventories, and natty gas. Friday, import-export prices, industrial production, capacity utilization, and Michigan sentiment. That is all. So there's not a lot of key data this week. We have no Fed meeting. We have no real earnings to speak of. We're not in any of our three biggest economic numbers, and we're not facing a GDP number for the. We already saw the first look at GDP for the fourth quarter. So this is a straightforward trading week. Hopefully the volume will hold up. We have been seeing the market trading great volume. I talked about that last weekend. Let's take a look one more time at the Nasdaq volume here. So far this year, I'll put this chart back in place, and here's what it looks like. Okay, we've been over 2 billion shares most days on the Nasdaq volume by the close. This is indicating there's a couple days under, but most of the days have been over, and the moving average is over. So this is really interesting. As long as we keep up in this area, I'd be really happy. That's why we're getting some of these great days that we are on the stock trading side. As usual, charts brought to you by eSignal 11. We will be here to help you make money all week. Hope you have a great trading week and a great weekend. Look forward to the long weekend next weekend, and we will talk to you soon.